The average mortgage is $2,600. The average rent has eclipsed $2,000. And so, yeah, I would say every person should have gold and to a degree some silver. What else would you save in? Would you save in an instrument designed to lose value like a fiat currency?
All right, guys, listen, this is probably one of, if not the best interview I've had with Lior Gantz on this channel, period. We talked about many things today. We talked about BRICS. We talked about the 15th BRICS Summit. We talked about why a BRICS currency is unlikely. And we talked about inflation, the US, and how that's going to affect gold and silver in the next few years. Again, one of the best interviews I've ever had, but it is kind of long, so I hope you guys stick with me for this entire interview because it's definitely well worth it. Now let's welcome Lior into the channel, but before we do me a favor and hit that subscribe button and help us continue to grow. My channel is sponsored by SDBullion.com. New customers can get their first order of gold or silver at spot by going to SDBullion.com/new. So Lior, I want to start off by talking a little bit about inflation. It really hasn't seemed like it's been at the top of the headlines lately, but a lot of people are definitely still hurting, and the price of things continue to go up. Gas is going up again. What's going on?
Most people have forgotten that inflation used to be a major problem just a year ago. And because of what the Fed is doing, and because of what the media is saying, it looks like we've turned the corner, and that inflation is steadily trickling down. Not at all. If you see oil prices, they are climbing higher. Shelter going higher. Food not going down. Anything that you would care about as an average person is going up. And wages are actually still going up. I think that in 2024, people are about to see that once the Fed eases from the throttle and doesn't raise rates every meeting, but maybe every second or third or fourth meeting, and perhaps even not raise at all, so pause it altogether, I think that people will see that inflation is out of the Fed's control. They can contain it, put a seal on it with these very high interest rates, but it's so powerful, it's going to erupt. So this game between the Fed and inflation will keep on going, and I think that the real end to it is when it needs to end, when the inflationary forces in our economy that are still very strong will ease, and I don't think the Fed can actually fix it. To show you the other side of this, in 2009, when they lowered rates to zero and then pumped the economy with endless QE, it didn't spark inflation because the deflationary forces were so strong. And they had to keep rates at zero until 2015 in order to spark some inflation. I think we are about to see something of the same magnitude, where in the next 4 or 5 years, inflation will remain very high until we'll be on the other side of this peak globalization that we've entered.
So you say it won't end until it needs to end. When will it? I mean, where do we have to be for it to need to end? Because I mean, I get comments from viewers all the time about how they're hurting so much more than they were even last year when inflation was huge in the news. So where do we need to be for it to need to end?
Well, let's think about what has created this inflation. So for the first part, we had the pandemic stimulus. That was unprecedented, and that's still very much in the hands of consumers. There's about $6 trillion sitting in money market accounts, an all-time high. And that money is cash. That is cash. That money will continue to be spent. And look at the economy. Because China's demographics are collapsing, and because their youth unemployment is at 21%, this is the type of youth unemployment that you see in Italy or Spain, not in places like China. Because their GDP was so tied to real estate, to the tune of 25% of GDP, that is so irregular, and their real estate bubble is collapsing, you see that China is in a real decline. And because they're making it harder for foreigners to deal and do business there, Americans are moving businesses out of China. When you move a business out of China, an existing factory When you have to rebuild something you already spent millions in building, that is very inflationary. When you have to retrain employees, that is inflationary. And so I think that it will take a few years for us to be at the other side of this reindustrialization in the West, and for us to be in Europe in a situation where they are comfortable with the reality that Russia no longer supplies them with cheap and reliable oil and natural gas. So it will take a few years.
All right. Well, man, that's really a lot to think about. And you're 100% right. And I kind of brought it up too. Like, it hasn't been at the top of the headlines lately, but it's really there. The price of everything's going up. Gas is going up. Food's going up. People are struggling, and it's really hard for them to survive. And it's crazy to think about. We aren't even at the end of this. You know what I mean? And I think what your common American public, looks at when they see inflation go, it was 9%, now it's 7%, and they think that's going down. No, it's still 7%. It's still, the price of everything is still increasing. It's
Absolutely.
Yeah, and you wouldn't believe how many people don't get that. I don't know.
Just think about housing. The median price of a home is 406,000.
Wow. I mean, my home is worth 2.5 times of what it was when I bought it, and I only bought my house 10 years ago.
The average mortgage is $2,600.
That's
The average rent has eclipsed $2,000.
There's a lot to think
With
about
the
there.
with the national income at 4,000. At 50% of your income is going to rents. I mean, that's African nations
50% of your income is going to rent, and that's not even including the
on a,
very
on a
high,
national basis.
and that's not even including the very high cost of energy and food right now.
Absolutely. So that's why I'm saying that this is a very extreme situation because we're transitioning from globalization to deglobalization, and it will take a few years in America for the free enterprise system to solve it, which it will. In China, it may not solve it because there is no free enterprise system. There's a top-down system, and if the government can't figure this out, and it's not that easy to completely revamp your model that has been working for you for 35 years, then they are in a real problem.
So let's talk about BRICS a little bit. I know a lot has been happening recently with that. They just had the 15 summit, or is that getting ready to happen?
Oh, it happened.
It happened. Can you give us a little bit of info as to what went on there, what was said, how that's going to affect silver and gold, the US dollar? I just kind of want to get your thoughts. Dig in.
Okay. Well, most people don't know that BRICS originally started as BRIC. And BRIC started as a mere analyst report from a Goldman Sachs economist that authored a piece called BRIC in 2001. And basically, he came up with the name or the acronym for Brazil, Russia, India, and China as emerging countries. At the time, as you know, Russia was just after their major crisis in '97 and just starting to get into the 2000s. China was the real engine of the early 2000s. India, with its incredible potential, an English-speaking country with over 1 billion people and very cheap labor, and Brazil with its resources and its might, its access to everything that it has in Latin America. And then in 2006, they actually meet up for the first time, and then they include South Africa, which makes it BRICS. It's important to note that they're just an association. There's nothing binding these countries, and even though they have a lot in common, they also have a lot that is in the way, and has no common interests. I'll give you an example. Russia and China, for example, have disputes over territory. India and China have incredible current disputes over territory. That's only going to get worse. India also stands in a very interesting junction where it has access to the oceans in a way that can disrupt and block China's access to the high seas, part of what we call the first island chains. And as you know, Brazil is in Latin America. So it's interesting. In South Africa is in a very different region altogether. This summit was all about the fact that these countries now, in terms of population, control about a third of the world's population. And they control a lot of the GDP. But they are still very much outsiders to the Bretton Woods slash petrodollar system. They are sanctioned, they can be punished, they are certainly antagonized, they're cornered, a lot of pressure is put onto them. They, if they want access to funds, that to be through the IMF or the World Bank, if they are their allies, and all of this, and none of them are in the G7. So all of this put together is their main cry out. We should have much more of an impact on the state of affairs and geopolitics than we currently do. And the way that you increase that is what they did, is include more countries into the BRICS. So the BRICS Association has declared that they have invited a number of countries to join them, and those countries will accept or not accept the invitation effective January 1st, 2024. If they do, and because they have invited Iran and Saudi Arabia, it means that they will effectively have an association that controls way more than what OPEC controls, with about 75% of global oil production. So that's an interesting fact. And obviously more GDP, they will control about 46% of global GDP, the new BRICS Association, and I think about 36% of the global population. So over a third. On the flip side, nothing major or concrete or binding really happened. So a lot of rumors before the conference or before the summit was that they'll announce some sort of gold-backed currency or any joint currency. Nothing of that kind materialized. As I wrote many weeks before the summit on our newsletter at Wealth Research Group, we specifically said that this is a project that takes 20 years to put into the making. If you want a joint currency, especially gold-backed, it's not something you create at the on a whim. And so I think that where the BRICS can even remotely begin to dethrone the dollar is by just agreeing to use either the yuan or just in general trade with each other, not using the dollar more often. So we will see if that actually transpires between them. They certainly are taking steps in that regard, but it's not huge. It's not in large quantities. What was interesting that they created their own counterpart to the World Bank, and it's called a New Development Bank, and they're going to fund a lot of their projects with that bank. China being the sole lender in that, mostly the sole lender in that bank. So we'll see how other countries chip in to that. But I think that on the flip side, adding more countries to the BRICS creates a situation where now this association really does not have a lot in common. They may have a general disgust with the West, or a general contempt to the way that they are treated, but nothing more than that. So I think that what this summit proved was that they don't have currently any military technology or intelligence or anything else that they are really putting their heads together and are trying to achieve some sort of a common goal.
Gotcha. So let me ask you this. These countries already don't get along, and like you said, they're adding more that aren't going to get along as well. Why do so many people worry that BRICS is going to, say, overtake the US dollar if they do introduce their own currency? I mean, I get that they control a huge portion of the world's GDP, but if you have countries in this at war at each other, how does that work?
It doesn't. There's no real threat to the US dollar from the BRICS at this moment in time. Now, granted, The dollar has been weaponized to a very large degree in the last few years. About 40 countries around the world have some sort of a sanction against them from the SWIFT or other region of fintech that the United States and its allies control. So it is a problem. And the US is stretching the boundaries of what other countries will allow them. But keep in mind, India is a very strong US ally, very strong. They're part of the Quad, whose stated goal is to contain China. So when you have a country that clearly is not a true BRIC nation, and it's one of the big ones, you can see that it's not black and white. I think that what is happening a lot now, especially in the West, is that you have so much hatred of meddling and intervention. A lot of people that grew up into the early 2000s and were basically between their 20s and 30s when the U.S. invaded Iraq and Afghanistan, and basically their whole adult lives, they've seen failed wars and an attempt to create democracies where democracies never existed before. They just don't like American foreign policy, and when they see that the current administration is pouring billions into the war between Russia and the Ukraine, they're like, well, it's my tax dollars. I want them here. I want them at home. I want them working for my healthcare, my education, my pension, etc. And that really is what fuels a lot of the debate around the strength of the United States and their deficit, etc. Because the deficit is exploding right now, and it's not going to stop, especially with interest rates as they are. The United States year to date, meaning just 8 months, has paid around $70 billion a month in interest payments alone. That's about $2 billion a day that goes to waste just on interest payments. And that number will continue to grow because even the current debt needs to be rolled over. And when you roll it over into higher yielding debt, it's just going to be more of the same. So it's very interesting what's happening, but it's not enough to shake the confidence that other countries still have in the incredible resourcefulness and ingenuity and just the genius of the free enterprise system and all the benefits that the U.S. has to offer the world and its might. It's just the only real power that no one can contend with. You have two oceans that are incredible borders, and unlike China, those oceans are not contended with islands. If you look at China, there is what is called the first island chain, and directly on China there are hundreds of thousands of missiles, troops, etc., that are U.S. allies pointing right at them. If they needed to blockade and stop the shipments of oil into China, that is doable. It's not the same with the United States. The only thing that threatened the United States was military bases that are either Soviet or Chinese or otherwise in Cuba or German before them, but it never materialized. So I think that we have to keep in mind how powerful the geography and the topography of the United States is, and the fact that most countries still rely on the United States way more than on any other country, and not only rely but trust that when push comes to shove, they will support them if they need, and that is the real power of the United States. But it does come at a huge cost to the national deficit. So at some point, it will surely need to be addressed, and the system will have to tweak itself even meaningfully. But it's always the debate on when.
Let me ask you this, just theoretically, What do you think happens if we ever do have a real threat to the US dollar, and or even let's just say the dollar is replaced as the world's reserve currency? What kind of fallout would we see from something like that?
So if you think about uh, the US dollar the strong position that it has, I think that it's more likely that it will not be replaced, but that other currencies might become attractive enough to accompany it. Case in point, the euro. The euro is about 20% of global transactions. So, as you can see, for the past 23 years, the US dollar has gone from being about 71% of global transactions to about 61%, but in a 20-year span. So if you fast forward this another 20, 25, 30 years, it may be 50% or 45%, still a very strong position in the world, still very trusted. Keep in mind that the reason that the US dollar is so trusted is because of the rule of law in the United States, the fact that that unlike in countries like China, you don't wake up and you have a real meddling in foreign exchange currencies where you literally change the value of your currency. It's a free floating currency in the United States, unlike the yuan, which is essentially pegged to the US dollar. Nobody knows the real value of the yuan. It has to be unpegged and allowed to run freely without government intervention for us to really know what the market thinks of it. So just keep that in mind. So, to answer something that might happen in 40, 50, 60 years, I think it's a little unlikely. I don't think it will be replaced in your lifetime or in mine. Its role will probably be diminished because the US is just 4% of global population, and that will actually shrink during this century. With African countries being the future, it's just very hard to know. But I will tell you this, it's not an overnight event. It's not something that you wake up tomorrow and all of a sudden it's like in Greece or in Cyprus. This is not the United States of America. So you will have plenty of time to hedge. You will understand this. It will be something that you can sense, and already you're taking great steps by holding precious metals and by diversifying, etc. So you are doing a lot of the things that you would do in a crisis situation in general.
Right. So would you recommend people, even if it's not something that we're greatly concerned about happening in our lifetime, like you said, having precious metals is still a great way to prepare for that?
It's a no-brainer. I mean, just look at the last 52 years. Look at the last 52 years. Gold is compounded at almost 7%. That is incredible. That is almost similar to the S&P 500, which is a productive asset that is actually dishing out a dividend. In the 21st century, in other words, in the last 23 years, gold has actually outperformed the S&P 500. So I always say that if Warren Buffett wasn't that stubborn and would take a portion of Berkshire's cash position and put that into gold, then Berkshire would already be $1 trillion company, if not $2 trillion. So, yeah, I would say every person in the West should have gold and to a degree some silver as part of its savings. It's what else would you save in? Would you save in an instrument designed to lose value like a fiat currency?
Right. I mean, fair enough. And I tell people all the time that you should be saving gold and silver, but you wouldn't recommend everyone. You just said diversify. You wouldn't recommend everyone putting everything into gold and silver, though, right? I mean, we do have to keep cash.
No, not everything. And certainly, you have to have diversified cash flowing assets. Real estate, exceptionally well companies that are trading on the major U.S. exchanges. I mean, that is the way to compound wealth. But if you want to have a better savings vehicle, then I would say whatever you're saving and are not going to spend, so your cash cushion, okay? For me, it's 2 years worth of living expenses. I would never trade in and out of it, and it is in precious metals. In other words, I take my monthly burn rate, I multiply it by 24, and that is my precious metals position. And that is non-negotiable.
Fair enough. And would you ever go over that? I know you wouldn't go under it, but would you ever go over that?
I would. As I said previously, I think it's either 24 months or 5% of your net worth, whichever is higher. So if you reach a point where your net worth is high to a degree that 24 months don't cover 5%, you should go to 5%, in my opinion.
Well, Lior, I think you gave us a lot to think about. Man, can't tell you how much I appreciate you joining me. I'd like to have you on again next quarter and not go 6 months like it was last time, if that's all right with you.
Absolutely.
Awesome. It's a pleasure. Guys, I'm going to put some information for Lior down below. If you want to learn a little bit more about him or get some of his free reports, I'll have those down below. And Lior, thanks again for joining us. I appreciate it.
Thank you very much.
Well, guys, if you watch this far into the video, then you certainly got a lot of great insight and knowledge from Lior, and I can't appreciate him enough. So thank you again, Lior, if you're watching this. And thank you for watching. I really do appreciate you being here. Do me a favor, don't forget to like and subscribe and help us continue to grow. And check out this video above if you want to watch even more great content. We will see you next time.